What's up, everybody? Welcome back. This is Josh from Red Shorts Trades. Today, I got a really cool video for you. As we've been going through a lot of the trade reviews and of the trades that I've been taking, a common theme that always is going to come up is where do I draw my key levels? How do I draw my key levels? How do I know when to enter a trade, exit a trade? And what I have found over the course of the past year is that there are some very key things that you want to keep in mind. So we'll jump right into key levels in this video. So for those of you who've been following along the trades that I've been taking today, I had a really awesome day. I had a pretty poor day yesterday. I ended up losing some of the gains that I made, but today I made it all back by taking the right trades, all by identifying the right trade to take. So this particular ticker had a higher time frame structure break. It was actually the Tesla trade, which kind of helped me make most of my gains today. And it was the higher time frame break that I was hoping would pan out yesterday. It didn't pan out, which is where I had my losses, but it ended up working out beautifully today. I wanted to show you what I saw in the higher time frame, and the momentum intraday was clearly there. Again, key thing I look for: higher time frame structure break, momentum intraday, and then price action at key levels. And in today's video, I want to break down the key levels that I ultimately look for, because they're really essential to making sure that you're getting the right trade, getting in at the right time, having confidence to hold to the key level to where those are at. And so every single day, let me break this down. Every week or every month, I'll take a step back and I want to take a look at the higher time frame. What is the higher time frame doing? What is happening day over day? What is happening week over week? This is going to give me a thesis on the higher time frame that I can then take into my trading intraday. Because remember, we're looking for that higher time frame breakout. Most institutional traders, most big hedge funds, they are trading on the higher time frame. So it's important that we know what's going on in the higher time frame, because we're ultimately, as a small retail trader, not going to move the market on our own. We're ultimately trying to understand what's at play on the higher time frame so we can capture some of the moves that the institutions and hedge funds are ultimately trading. So higher time frame is where I'm going to draw key levels first. The second place I'm going to draw key levels is pre-market high and pre-market low. These are primary levels of liquidity, and all that I mean by liquidity is that these are where buyers and sellers are historically sitting. And we're going to identify these areas with very key pieces of information, which I'll break down in a minute. We're also going to mark out prior day high and prior day low. These, again, are key areas of liquidity that we want to make sure we're aware of. And then when we're trading intraday, we're looking for the opening 1 minute or the opening 5 minute range. We'll mark out the high and the low with the first 1 minute, or the high and the low with the first 5 minutes, and then we're looking for price action at any of these key levels. So it might seem a little confusing, but don't worry, we're going to map this out on the trades. You'll be able to see it on the charts. But it's so important that when we're thinking about what is happening around these key levels, we're a break and retest trader. We're not a breakout trader. We're not looking for a key level to just break, because there can be a lot of times where you get a fake out break, so it doesn't actually go the direction you want. You get faked out. They call it fake out liquidity. So you think that it's going to be breakout, go straight through and continue to push higher, and then it doesn't. Sellers are sitting right at that liquidity zone and those key levels when you're trying to go bullish, and they end up pushing the price down. Or on the flip side, you're trying to go bearish and buyers are standing right at that key level and that liquidity zone, and so they're trying to push it up. So I find to have the lowest risk entry and the highest probability of winning, I'm looking for a break and retest. This is just what I've grown to be accustomed to, and it works out the best for me, and it's something I can see consistently on the chart, and I'm constantly training myself to only look for this and not anything else. The worst months that I have had trading, I look for other strategies and other key levels, and I try to make things up on the charts. It's so much more simpler when you're looking for one thing again and again and again. Trading should be boring. If you're getting cute with trading and you're getting too excited around trading, that's when you make emotional mistakes. And emotional mistakes can cost you a lot of money. So it's really important to make sure you're looking for one consistent thing. Break and retest. On the left, we have a bullish example, and the blue lines, all those represent are where these key levels are. So when we've identified a higher time frame breakout, we've identified some liquidity, some momentum that's building intraday, specifically in the first hour. I only trade in the first hour of the day. Specifically around that time, we're looking for some good momentum, either to the upside or the downside, to show which stocks have relative weakness or relative strength. We break through a key level, as we see over here on the bullish side. We come back in, we test that level again, but we have the proper price action at that level, and then we see it continue. So we're playing a continuation pattern. Same with the bearish moment. We move down past the key level, we come back in, we retest, and then we push down further. And effectively, we always want to make sure we're waiting for candles to close. This is such a key thing. we get into our level, and then we set our stop loss or take profit at our other levels, and then we are looking for candle closures, right? So if a candle doesn't close past our stop loss, we're not getting out of the trade. We're not getting out of the trade or taking our final scales or final profits until we actually hit our take profit. And the last piece that's really interesting that you need to make sure you're always looking for is price action at these key levels. You can draw out all the levels you want, but you need to make sure you're looking for the right price action, the right candles that are telling the right story at those key levels. These candles form all over the charts, but they are only significant when you're trading consistently on the same time frames at the key levels that you're ultimately looking at. I cannot talk today, but hopefully you will bear with me. All right, we're going to go and jump into a chart. I want to break down how I mark out my key levels, and we'll break it out into the different categories that we just talked about. And then we'll take a look at the trades that I took today and why I took them and how I got into my entries and exit. All right, here we are on Webull, my desktop trader. If you are curious what broker I use Webull. I really have been enjoying Webull. They have great technical analysis tools, and I don't have to buy a subscription for TradingView, even though I really like TradingView as far as charting goes. TradingView is second to none, but Webull gets pretty close. It gets pretty close, and I've really enjoyed it. I've learned it inside and out, and for the lot sizes I'm taking, it works great for me. So if you're curious about that, I got a link down in the description. You can check out Webull. So here we are on the meta chart. I want to just show you what I'm looking at for the higher time frame. So the first thing that I'm looking for is I'm looking for break and retest zones that ultimately are exposing where liquidity is, or places where we saw price reject down pretty dramatically. Those are going to be key points of liquidity. So if you think about it this way, we saw price, let's start here. We saw this big gap up. We saw price pushing up here all the way to this zone here. And then we saw price push itself down here. So we saw aggressive daily pushes all the way down here. So this is a key point that I want to keep an eye out for, because when aggressive moves happen and they're pushing price down here, that's a good signal that institutional sellers are sitting here. They're selling off down here. And then we filled this gap that we had exposed, and now we started pushing higher. So this is definitely an area that I am going to want to mark out. Again, as I mark out key areas, when I'm on the higher time frame, I mark out key areas of support and resistance. Support if price is above currently that particular level. Resistance if price is below that current level. So what you see here, we came right back into the zone, and what happened again? We saw another aggressive selling push down, but this time we created a lower high, so we're clearly in an uptrend. The other thing I see on this chart is that we are forming this bullish flag. We saw price push, and we're moving up. And then we created this, we're creating this flag here. So as you step back, you look at this, this is ultimately what we're looking for when it comes to a higher time frame breakout. We draw our patterns, we have a key resistance level, we have a trend line going up, we have higher lows getting put in, and we're waiting effectively for this ceiling to break, which it ended up breaking up over here. And then the next level I might draw out here, we're still in a bullish momentum on the daily. We're clearly moving up. The stock has been moving up on the daily. And then the next thing that we're ultimately going to be looking for is the next area of resistance. So we saw price push up to this price here, the 601.38, and then we started pushing price down. So this is the next level on my chart I'm potentially going to mark out right here. Now price is currently above it, so I'll keep it there. But effectively, what did we see? Well, we were seeing a pullback here. We saw this wedge pattern pullback, right? This is a consolidation zone, which is another bull flag. And we saw a breakout and really nice momentum pushing us up, breaking this key level, and then we pushed even higher to the upside. So I just want to show you where I potentially am drawing my key levels. The next thing that I would be looking for is I go down to the 4-hour and see if there's any key levels that are sticking out. So clearly we see, again, price aggressively pushing down here. So this is going to be a key level of resistance. Resistance, all that means is that price tried to get above it, but it resisted moving above it. Support means price tried to get below it, but there was clear support on the bottom side to move it up. So here we're sitting right here. We're currently in this consolidation path. The other area that I see here is we dipped a little bit below this level here. So this could be a potential area that I adjust down just to get things. The more touches, the better. So I'm clearly trying to adjust touches. We saw some consolidation here, so this might be a more accurate key level. We also saw it pull back into it and then bounce off it right here. So this 593, 594 level, clearly a point on the higher time frame we want to be aware of. And then we saw clearly a rejection of it here on the 4-hour. If you go down to the 1 hour, the 1 hour, we take a look at if there is anything else that potentially could be forming. And what I see here is a very clear downtrend motion here. And this right here, we had a pre-market breakout here on Meta. So now what I would be taking a look at, those are all the higher time frame levels I'd be marking out. Now these flags are just here for me. Usually I don't have them on my charts. They just signal to me when I'm seeing higher time frame breakouts. But outside of that, I don't use them as entry zones. I don't use them as exit zones, but I just draw them so I understand, again, the thesis of what ultimately is happening. I'm seeing a bounce off of the support level. We're clearly pushing to the high. Now, the next piece that I look at, and we'll just go back to this day here, which is today, and I did not take trades here on Meta, but just to show you how I would mark this out, I would go down to the 1 minute chart, and effectively what I'm looking for is I'm looking for the first 5 minutes, 1, 2, 3, 4, 5. Now, why wouldn't I have taken this trade potentially today? I would not have taken this trade today because there was no intraday momentum moving us to the upside. So that's something you want to look at. You want clear momentum to the upside. We had the higher time frame breakout pre-market, but we just didn't see the momentum early into the day. Now we started to build it here and move it up, but this isn't the type of momentum that I'm looking for. So we're going to shift over to the trades that I took, and we'll actually mark out our opening 5 minute, opening 1 minute range there and our pre-market candles there. The trades that I took today were on Tesla. So we're going to go ahead and step back out to the 1 hour. What did we see? Well, on the 1 hour, we had a very clear downtrend channel. And that downtrend channel yesterday, originally we had it poised here on this level here, and we saw this breakout yesterday, but clearly on this 1 hour you could see big rejections here. Then what happened? So this is another area of liquidity that we've had marked out with this downtrend channel. This morning we saw a break and we were looking for a break out of that channel zone. So what did we do? We marked out our pre-market high here, marked by my purple line. Sorry, our prior day high marked out by a purple line, prior day low. And this is the channel we were in. These are serving as clear profit targets potentially. And then I also saw these yellow lines. This is pre-market high. I was looking for a pre-market high breakout in tandem with this higher time frame break of structure here. So what did we see when we got into the trade here? So we saw this pre-market move pushing up, this consolidation zone here, just had it marked out on my chart. So I ended up going 1, 2, 3, 4, 5. So these 5 candles, I marked out the 5 minute high here, and I mark out the 5 minute low. And those are the 2 levels that I have on this chart. And we saw these 3 bullish momentum candles in tandem with a higher time frame breakout, in tandem with a pre-market push. All of these things are signals that are now coinciding to give me confidence into taking the trade. So effectively what I took on the first trade here, I actually marked out the 1 minute candle here, because again, you can mark out the 1 minute and the 5 minute, and which one you take just depends on what price action is doing. Again, recall the price action candles that I'm ultimately looking for. I'm looking for a bullish candle, bullish engulfing, or I am looking for a hammer candle. And what I ended up seeing here, I saw this big push down. Wasn't sure the trade was going to work out today, but then we saw these massive momentum candles up, showing that buyers were clearly in control. And then I saw this pullback into this 1 minute candle, this 1 minute opening range candle. And what I saw forming here was a very clear flag down. We were holding this level. I saw this candle here, this red one, but it didn't give me, it was a bit of an indecision candle. We still wicked below into the level. We held price above the level, but it wasn't bullish enough for me to jump in. But this next candle was. We wicked below again. We started to push up. I hopped into the trade, and I was looking for initially that first pre-market break, which we ended up getting. We pulled right back into this zone here, but we were still within our parameters here. And effectively what I was looking for on the higher time frame, let's take out some of these levels. These levels were just more markouts for me as I managed the trade. But I was looking for this 418.40 level, and how did I get that? That 418.40 level was a prior day consolidation point. So again, we're looking for impulsive moves. That's how we build our levels. So prior day high, impulsive move down, another bounce, and then another bigger impulsive move down. So this is clearly a key level of liquidity that I'm looking for price to chase back into. So this 418.40s was my ultimate profit target that I was looking for. As you can see, we scraped up here. I was taking some partials. The way I do my partials, when I initially enter a trade, I'll take partials at high of day, because you never know what the price is going to do, and then it allows you to hold for trailers for longer. So I ended up going all the way up here, and my final profit target was really this prior day high. I had a feeling that it was going to go up to that given the higher time frame breakout. I ended up holding my contract, but had it listed as a break even. It lazily moved back here. So we allowed it to break even ultimately, and it ended up pulling me out of the trade just given how the contract was working. But effectively, that was the trade. Higher time frame thesis. We mark out our pre-market high, a pre-market low, our opening range, high and low, and our prior day high and low. Now we're looking for price action around any of these levels. When it comes to which level am I going to take a trade off of, it really depends on the price action based on the level. For example, I could have waited for price action around the pre-market high, but I also know that I can mark out these other areas of liquidity and potentially get in a little bit early or have a different risk profile on these particular trades. Then where do I scale and take profits? I'm always going to scale from the point of the trade entry. I'm always going to take some scales at high a day. Depending on the momentum I see and the confidence I have in the trade, I'll take anywhere from 30 to 50% of my position off. And then we'll wait for the next scales higher. As you can see, we kept creating a new high, pulling back, creating a new high, pulling back. Final profit target here. And by the way, I'm at a minimum always aiming for a 1 to 2 risk to reward ratio. And as you can see, just after we broke our high of day, we hit the 1 to 2. But obviously I had higher time frame targets in mind, 5x risk to reward, 5 times risk to reward ratio here. And then ultimately my larger scales are going to be these major levels. The challenge, to be honest, the challenge is waiting for price to get through the consolidation to get to your profit target, because my remaining trailers ended up getting me out of the trade here. But then we see price just bounced right off of that pre-market high level and then ended up pushing back up higher again. Market structure pushed us higher. So what did I end up seeing that ended up making me take the trade again? Well, I was monitoring on the 5-minute candle here. And as the day moved on, one of my alerts went off. What ended up happening was we ended up pulling back into this order block, and then we saw a really bullish momentum out of it, closing above this consolidation zone again. So I added a contract back in, and we ended up seeing scales all the way up to effectively my third profit target, which was this 426 level, which was 2 days ago, the high of day. We ended up crushing that. And I ended up not holding this overnight, even though I feel like I could have held it overnight. I wanted to not get greedy and I wanted to take my profit there. But that was how, between those two trades, I was able to make back everything that I lost yesterday, simply from understanding higher time frame levels, pre-market levels, prior day levels, and then effectively drawing out my 5-minute level for the 5-minute opening candle, and then my 1-minute opening candle, and then gauging price action around those levels. So this was a meaty topic: price levels. How do you drive price levels? How do you capture trades off of those price levels based off price action? If you have any questions around this could be a little bit of a tricky topic. Which price level do you take action on? Please drop them below. I'd love to refine this content for you even further to answer some of those questions that you might have based on where and how you know to take based off these price levels. When I first was starting with this, I used to just look at one of the price levels. So it was just pre-market high. And then I would just wait for only pre-market high to show up. And if it didn't show up, I didn't take it. Even if the 5-minute opening range showed up, or even if the prior day level showed up. What I find more times than not, I'm taking the 5-minute opening range or the 1-minute opening range levels. So next time I'll break down exactly how I end up taking based off the prior day high or the pre-market high, because usually there's some pretty clear signals that you can see in terms of when you want to take a trade there. But obviously it always comes down to price action. What are the candles doing around those key levels? So if you have questions, drop them down below. If this was helpful, definitely hit the like button and pound that subscribe button like you mean it, so you can get more of this awesome content. Until next time, we'll see you then. Thanks.